Hello and welcome to Zee Commodity Capsule. Gold prices continue to be in the spotlight, even though they might seem to have taken a breather on Wednesday in international market after having shed nearly 40 to 50 odd dollars from its previous session's record high, which happened to be at $3,750 an ounce. Same suit was followed by MCX Gold, which touched its new all-time high above 1,09,000 rupees for 10 grams. We are seeing that gold prices are holding flat and currently close to its key level of $3,700 an ounce in international markets as far as COMEX December delivery is concerned. Now clearly investors awaited the key inflation reports, which is due later this week. While expectations of US interest rate cut this month helped keep the yellow metal above the critical $3,600 per ounce. We have seen that dollar index, although it has managed to recover a bit against its rival, it continues to hover near its recent 7-week lows, near 97.75 mark. Whereas the US 10-year Treasury yields, although has managed to edge higher, is hovering very close to its recent 5-month lows. Focus, as I said, now shifts to US PPI inflation data, which is due on Wednesday, followed by the CPI consumer price inflation data, which will be read on Thursday. US economy likely created 9,11,000 fewer jobs in 12 months through March than was previously expected. It happens to be one of the weakest labor data since 2002. Markets are fully pricing in the 25 bips rate cut, while the likelihood of a larger 50 basis point cut stands at around 8 to 10% according to the Fed Watch tool. Meanwhile, there are some revised forecasts coming for gold. ANZ raised its 2025 year end gold price forecast by nearly $200 to now $3,800 an ounce, while it reads and expects another high at around $4,000 an ounce for gold, but next year in the month of June. Same is the case with silver. They see the white metal rising newer highs, and now they have revised their year-end target to $44.7 per ounce as far as silver is concerned. Copper prices are holding steady above the $9,900 a ton mark. Now the strength on Wednesday is coming by a landmark planned merger between Anglo American and Teck resources and the ongoing supply concerns following global mine disruptions. We have seen copper prices on London Metal Exchange hovering above $9,900 a ton. However, the gains were, you can say, slightly capped because China's new bank loan issuance in August is expected to have increased mildly, while the manufacturing activity has declined along with the domestic demand, which remains sluggish. Oil prices have risen by nearly 1% as Israel's attack on Hamas targets in Qatar pushed up the concerns over the heightened geopolitical tensions in Middle East. Now Brent crude prices are hovering above $67 a barrel. Arabica coffee settled above $3.80 per pound, near its highest level since early May. And Malaysian palm oil fell over 1% to below 44.50 Malaysian ringgits a ton, which is down for second session as traders digested the monthly data from the Malaysian Palm Oil Board, which has posted that the palm oil stocks rose by nearly 4%, and this happens to be the 6th consecutive monthly rise as production outpaced demand.